Q1 FY21 was when we saw the full impact of the lockdown induced by the COVID-19 pandemic kicking in. We had lockdown 1.0 followed by 2.0, wherein operations were either zilched to curtailed. But when it comes to JSW Steel, which is all set to report its Q1 numbers, the added whammy that it has received has been because of the outbreak of coronavirus at one of its most important plants, the Vijayanagar plant. Hence, output is expected to drop very, very significantly. JSW Steel already announced in their press release earlier in the month that the output was only 2.96 million tons in Q1 versus more than 4 million tons that they posted in the corresponding quarter. So sales as well will obviously be much lower. We are expecting it to come in at roughly about 2.8 million tons, a drop of almost 25%. Added to that is the pressure of a fall in steel prices as well. So average realizations or steel prices of what JSW Steel has managed to sell is seen dropping by roughly 20%. So we are looking at the consolidated top line dropping by almost 38%. And just a little over 12,200 crore rupees. No surprises for guessing that this is going to trickle down on the operating performance as well. Yes, you may have some benefits on the cost front, but really it's largely going to be that negative operating leverage that's going to play havoc on the margin. So EBITDA is seen declining by 68% at a little under 1,200 crore rupees, and hence margins for Q1 FY21 are seen at 9.8% versus 18.8%. And hence, because of this 2,000 crore rupee drop on the EBITDA, compared to the corresponding quarter, this time around, the ET now poll is pegging that JSW Steel will put forward a loss of 695 crore rupees. This will be, I think, the first time that we'll see a loss being posted by JSW Steel in a long time. But, we are in the midst of this pandemic. We are in the midst of a situation where JSW Steel's plant had to be shut down because of the COVID outbreak. And then, of course, to top on that, the weaker realizations. What makes matters worse is also the fact that the overseas subsidiaries as well are expected to disappoint. Last quarter, we already did have JSW Steel trimming their capex guidance, almost halving it, in fact, from that 16,000 odd crore rupees that they had set. And now, of course, you had that outbreak. So any which ways, the expansion plans as well have been set aside for a little later date. This is Dolvi, this is Vijayanagar as well. All of that capex plan will be pushed aside. What I would like to hear from the management is if July onwards things are picking up. We did have Mr. Sajjan Jindal telling ET now that mercifully things at the COVID-affected plant have sort of come back to normalcy. So that's a positive news flow. However, that will only be reflected in the July quarter. That's in the July, August, September quarter. And apart from that, of course, another added positive would be recovery in demand, whether it's government-induced infra spending, private, or even what the status is when it comes to its overseas subsidiaries.